welcome to this another episode of ECCB Connects. This week we'll be looking at the payment system. Now you go to the ATM machine, put in your card, withdraw money. How does that happen? I have with me Francis Fontenelle, advisor in the Banking and Monetary Operations Department, to discuss the payment system. Fonty, welcome to ECCB Connects.
Thank you for having me on the program.
Fonty, the ECCB, in collaboration with the IMF and CARTAC, recently conducted a workshop which involved central banks throughout the region, and that workshop focused on financial market infrastructure, which essentially is the payment system. But before we get into the details of that workshop, explain, what is the payment system?
Before we go into the payment system, we need to appreciate the purposes of the bank. And according to the ECCB Agreement Act, I think Section 4, it defines the purposes of the bank. One is to regulate the availability of money and credit. Another one is to promote and maintain monetary stability. Another one is to promote credit and exchange conditions and a sound financial structure conducive to the development and growth of the member states. As you'd appreciate, all these purposes tend to lead to one thing, which is the financial stability of the region. Now, the financial stability of the region can be achieved for a number of means, number of ways. One which has been dealt with over the past couple of years is to strengthen the banking system, so to ensure that banks are adequately capitalized and regulated. And hence you had the new Banking Act,
Which we discussed last week.
Oh, interesting. Secondly, we have the payment system. The payment system, an effective, a robust, an up-to-date payment system is critical for the financial stability of the region, and I will explain. Now, what is a payment system, really? The payment system really refers to the instruments, it relates to procedures and rules that govern the transfer of funds between or among participants. Essentially, the payment system deals with recording, clearing, and settling of transactions. The payment system is very broad by definition. It can mean a bilateral, where two persons, one owing the other and paying the other person, and it can also mean the government raising securities on the regional government securities market. Okay? Now, as a central bank, we are concerned with what is referred to as systemically important payment system. An individual transaction between two persons may not be systemic. It may not trouble the system. But for argument's sake, if a government has to raise, say, $100 million on the regional government securities market, and something has to go wrong, then that can be systemic. So we are concerned, and what is systemic is that if there's a disruption, there can be a ripple effect, and it can affect a lot of parties. I think it was in September 2008 where Lehman Brothers at the time could not pay its counterparties, and those counterparties were owing other counterparties. So what you have was, a financial explosion. Yes, so a lot of persons got affected. And so that is what we refer to as contagion. So if within the payment system, there are areas where there is the possibility of contagion, the central bank, as part of its financial stability responsibility, sees it fit to look at those areas and to try to help to mitigate the risk to prevent contagion and to promote financial stability.
Let's break it down a bit. For example, with respect to the ECCB's operations and the payment system, let's say a business operator in one country, what does it mean for that person to have a fully and proper functioning payment system?
Yes, that's an interesting question. Currently, the option we have to transact business is money, it's cheques, and plastic. Now, an efficient payment system is where you can have settlement taking place in the shortest possible time without risk. We have situations where if you need to write a check to somebody, the check might take 3 days to clear. That is considered to be inefficient. If the check could clear within the next hour or within a shorter space of time, then that is considered to be a more effective way of settling transactions. You have incidents where you buy a particular security and it takes 5 days for that security to come in your name. So you would have made the payment today, but you would have gotten that security to your name in 5 days' time. So the longer it takes for transactions to settle is the less efficient the payment system is. So what the central bank has done is what we refer to as the automatic clearing house, in which you reduce the time it takes for checks to clear between counterparties. And so therefore, an efficient payment system, what it does is to increase efficiency by reducing the time it takes for the transactions to settle. People take it for granted when they do transactions, in the sense that you go to the ATM, you put your card in, you have money in the account, you put in your number and you get your cash. Or somebody you're trying to send money to maybe a family friend in the next country. You go to the bank, you do the wire, and then the money appears on the person's account, albeit with a time lag. It's not abracadabra. There is a machinery working behind the scenes to facilitate that transaction taking place. And that is what the payment system is about. That behind the scenes machinery that is working to ensure that you get value, to ensure that the transaction that you conducted actually reflects itself where you want it to, is what the payment system is about.
Okay. In short, ease of business.
Yes.
Ease of transaction.
That's correct.
Seamless transaction.
Exactly. Because, I mean, there are rules governing settlement. There were incidents where you send the money to your counterparty, but in the process of the money getting there, the counterparty went bankrupt. Does that money come back to you? Where is that money? Who is responsible for it? So these are the issues that we need to discuss with respect to payment system, which is currently taking place now as it relates to an effective and a robust payment system.
Let's look now at the workshop, the recently concluded workshop where you looked at financial market infrastructure. You spoke about the importance of having that structure in place. Explain to us this concept of financial market infrastructure.
The financial market infrastructure really is a system, is a multilateral system among financial institutions that is responsible for recording, for clearing, and for settling, it would be payments, it would be securities, or other financial transactions. That's by definition. There's a financial market infrastructures. An example of a financial market infrastructure may be the automatic clearinghouse. The automatic clearinghouse, what it does, it has moved away from the old environment of check clearings, where individuals assemble at a place and they reconcile checks among themselves. What you have is a check imaging system, where the checks are uploaded into a system and it goes to a vendor where the netting off takes place. And the netting off information is sent to the central bank, where the information is put into the accounts of the various banks. This is what an example of a financial market infrastructure. Now, there are risks involved in financial market infrastructure. What is called technological risk. In the event that the information goes into the financial market infrastructure, but something happens and somebody is able to break into in terms of cyber, hacking into those systems. There's also the system of the risk of credit. There's also the liquidity risk. So what the workshop dealt was to look at the financial market infrastructure to ensure that they were robust, that there are certain principles that we need to assign to the management of those financial market infrastructures, that we are aware of them, and that we put it into practice. So the workshop was really, there are certain standards that you need to adhere to when you have financial market infrastructure, And the workshop is really to ensure that we are acquainted, we are aware of those standards and how we go about monitoring and regulating the financial market infrastructure to ensure that we have financial stability, which is, at the end of the day, is a net result of our action.
What does having robust and strong and sound financial market infrastructure mean to the citizens within the Eastern Caribbean Currency Union?
Most of our persons here are connected to the banking system. If the banking system gets exposed, then a lot of persons might not be able, you may lose your deposit, you may not be able to get your funds, checks might not clear. So it's important that the banking system remains robust and therefore persons can continue to engage in the business transactions seamlessly. So anything that may affect the financial stability of the region and affect the banking system can have an effect on the common man, because the common man is directly related to the banking system. So by having a robust financial market infrastructure, we tend to protect the entire financial community, which means the banks, which means the credit unions, and it allows persons to conduct their business without concern.
Fonte, thank you very much for speaking with us on ECCB Connects.
It's a pleasure. Thank you.
Stay with us. ECCB Connects will continue in a moment. We'll hear from some of the participants of the Financial Market Infrastructure Workshop.
To view any episode of ECCB Connects anytime, any place, at your convenience, check out our YouTube channel, ECCB Connects.
When you have a well-developed payment system in place, those persons who are underbanked or unbanked will be able to access basic financial services. So the payment system will benefit the man in the street by facilitating access to payment methods.
What we have learned here in this workshop will benefit the people of Aruba, because by us getting the knowledge that I have gained during this workshop, we can have a good oversight on the payment systems in Aruba, so that the payment systems will be efficient, and that will benefit all of the Aruban people.
Using the assessments will allow the payments unit to better oversee the operations of the PFMIs, and will help to ensure that in the end, that the financial system is stable, it's efficient, there's room for advancement.
Payment system is important for every country. The more advanced countries have advanced payment system, and that is why they develop so rapidly. Now to implement what we have learned here and put it into practice will help facilitate the growth and development of the economy.
Now with this workshop, what we've learned, I think that when we go back, we have to discuss it. Things have to be done, and decisions have to be made on a higher level. Then I think it will benefit the whole banking system, and of course also the people in my country.
The trickle down is that the members of the public would be able to know that they are operating in a safe payment system that instills confidence for them to use the different payment systems. So I will think that's one of the most important takeaways. Safety and mitigating risks that translates into the confidence of our payment system that serves the nation and the economy.
You're watching ECCB Connects, protecting our currency, developing our region.
That's it for this week's episode of ECCB Connects. Join us again next week when we'll be looking at the Eastern Caribbean Asset Management Corporation.